NFP explained in its simplest terms, NFP is non-farm payrolls. It's the number of jobs that are added to the US economy in the previous month, excluding farming work, because farming work is seasonal. It changes with the seasons, of course. It's one of the most important pieces of data that come to the market because it has a big impact on what the Federal Reserve will do with interest rates. There's a lot of talk around the cut happening next month. Now, if we see strong jobs numbers, if it's higher than the 60k consensus, that might cause a strong dollar because it may convince the Fed that they don't have to cut. If we see weak numbers, it may convince them that actually we do need to cut. So we'll see a weak dollar. But it isn't as simple as that, because every month you have revisions. Now, when Biden was president, every month you'd get really good NFP data, but you'd also get the previous month revised down massively. Some would almost say it's like fudging the numbers, but who am I to judge that? So if you get strong NFP data and big revisions downward, the market is confused. We can see volatility. Things can happen that you wouldn't expect. And I don't believe that retail traders can take the NFP number, digest what it means, understand what it means to the market, and then take a trade, because the move's already happened instantly. So for us, in simple terms, all we need to do is look across the markets and see what's happening after the data comes out. If stocks move higher, we can see a weaker dollar. If stocks move lower, we can see a stronger dollar. Yields, if they move lower, we can see a weaker dollar. If they move higher, a stronger dollar. And it's not just dollar that's affected, because we can see moves across all the markets: gold, antipods, all currency pairs, cryptocurrency. There is a strong move when we see risk flows happening. They're unlikely to stop until the stock market or yields actually get to a level. And that's when we execute a trade, because we're not analysts. A trader isn't an analyst. It's good to be able to understand what the data was and the implications across the markets, but that's for later on. And you'll, over time, as you trade through NFPs, you'll gain a bit of knowledge through every one. But you'll still only look at the tech, because, in my opinion, that is the safest way to trade. Wait for the data to come out, see what's moving across the markets, and then execute a trade later on the back of the move.